Bitcoin has finally broken out of its 6-month downtrend and is currently failing to hold the must hold level of 65K. A lot of this is having to do with what is currently happening in the world in the Middle East, but another reason could also be that the markets got overly excited and overextended in the past few days, and right now it's just having a short cool off period while it forms another higher low. My last video, I did mention that the likelihood of Bitcoin failing to hold this 65K level was a high likelihood and that the prices would come below 62K, take liquidity, as well as stop out any late longs. I believe that Bitcoin will only stay below 65K for a short period of time. That's due to high time frame indicators, global liquidity increasing, low funding rates, as well as Fed cutting rates. In this video, I'm going to show you my thesis of why this is, as well as I'm also going to give you a list of altcoins that I'm looking to add on this dip. I don't know how long this dip will last, as I don't know anything about geopolitics, and I'm not going to even pretend to. But from a grand scheme of things, looking at the market from a 6 to 12-month perspective, I still think it's in a really good place. Now let's jump into the screen. Now just to begin from a macro point of view, my previous video, I showed that this 65K level was a must hold level. The reason being is every time Bitcoin has pumped, it's just formed another lower high, lower high, lower high. And for it to reverse trend, it had to break this market structure and hold it. And I did say that the likelihood of it coming down, take liquidity, and stop out longs was a high likelihood. Obviously, this was also accelerated by the current events that are happening in the world. Has this changed my thesis about the market at all? No, it hasn't. I was prepared for this price to come down, so I have added a little of my bags here. And apart from that, I'm not taking any more actions. You don't always have to be in a trade. Not taking a trade is also a choice. Now, looking at the co-best investor, what are the reasons why I think that the market is still in a really good place, especially if you're buying in spot and you're holding it for the next 6 to 12 months? One of them is going to be the China stimulus. And China went from a severe recession, or at least worries of it, the biggest daily stock market since 2008. And why did this happen? Because Chinese government added 1 trillion yuan of stimulus. That's $140 billion. And if you look at China's Shanghai Composite Index, it went up 20% in 5 days. That's more than double than the average S&P 500 annual return. And we all know that China is a massive economy. Asia holds a lot of crypto, and this stimulus is only going to increase the global liquidity. As we all know, global liquidity and Bitcoin has a very strong correlation. The reason being, as I've mentioned in previous videos, Bitcoin is a reflexive asset, it's a risk on asset. And as global liquidity increases in the market, so does risk. When global liquidity falls, risk also goes down. Money goes from risk on assets like Bitcoin and goes out into safer assets like government bonds. Tweet here from Smiley Capital, really good one, basically saying that he doesn't pay attention to candlestick patterns, but high time frame indicators he does. Looking at the quarterly, he's talking about the Q2 candle, and that's this one here, the textbook indecision consolidation pattern after a monster rally, exactly what you want to see after a 25K to 74K move. Very bullish. Obviously, now it's the 1st October. We've just closed this Q3 candle green. Monthly, all 7 months of reaccumulation have provided with a close above the crucial level, extremely bullish. This level here is the previous all-time high being flipped from resistance now into support. On the weekly, getting rid of the candlesticks, having it as a line to get rid of the noise, saying pretty evident which prices market does not accept. Obviously this line here, and pretty evident where the real fund starts. Carefully bullish, and that's when the break of structure happens. Looking at funding, currently right now, the whole funding is all green. There's no froth in the market compared to if we go back to a year ago. Looking at the funding of BTC, we see a lot of these colors going up all the way to near 150% APR. Also looking at Fed's funding rates, they already cut 50% basis points. And the next FOMC meeting, that's the 7th of November, looking to cut another 25% and another 50 basis points again on the 18th of December. We did know from the previous FOMC meeting that what Jerome Powell was focusing on was the unemployment rate, and he was looking at that at 4.4%. That would indicate what he would do with the federal funds rate. Obviously, they're targeting 3.4%, but if unemployment rate went above 4.4%, they would need to cut rates more. And if unemployment rate was still below 4.4%, they wouldn't need to cut rates more. This is contingent on the next few prints of the unemployment situation. October 4th, which is 3 days' time, we're going to get the September 2024 print. November 1st, we get the October print, and then December 6th, we get the November print. So that's one print, two print, three prints before the next two meetings on the 18th of December. That's what we need to look out for. Another thing that is bullish in the market, but not as bullish as we previously thought, FTX reclaims is going to be anyone under $50,000 could receive payments by late 2024. Any larger claims would be 2025. So of course, all of these payments going back to most people are crypto natives, and they're most likely to be putting it back into the crypto market. But of course, this only claims under $50,000. That's in late 2024, and then next, all the bigger claims will be 2025. That bullish injection will happen later into 2025, as well as the increase in global liquidity. Just because Fed cuts rates now and China increases money into the economy now. If any of you are familiar with the concept of stocks and flows, stock being an economy, let's say a bathtub of water, and the flows being the injection of water or money into the economy, because the bathtub or the economy is so massive and worth so many trillions of dollars, even if you're injecting it with a lot of money, for that to see a big difference in the level of water takes time. That's why in this graph here, you see that global liquidity doesn't spike up massively. It's more of a curved trend that is followed. Now, next to looking at data of October, 80% of Octobers were green, 100% of election years had a green October, November, and December, and 100% of the years with a green September had a green October, November, and December. Obviously, we just finished with a green September, which hasn't happened in a long time, and it's an election year as well. So the likelihood, if it's the same this time, which I believe we don't have any reason for it not to be, we should also have a green October, November, and December. Q4 historically is very good for crypto. Now to quickly cover the markets, you can see that there's a lot of red in the market, lots of coins going down 10%, maybe not massive cascades of falling up to 20% per day, but it is definitely looking red. The list of coins that I'm personally looking at to add in this dip are going to be in the sectors of AI, memes, and gaming. And I've also looked at it in terms of risk of low, medium to high. Low risk ones being high market cap coins and high risk ones being lower market cap coins. Reason being, if you have a market cap that is 50 million and it falls by 10 million, that's a 20% fall. And if you have a market cap that is 1 billion that falls by 10 billion, that's a really small fall. With the first coin that I'm looking at, I have got near. Obviously, why have I picked it? The most popular ticker in AI, and I think AI is going to do very well. Number two, I've got Prime. I believe in that gaming and AI is going to do very well this run, and Prime is an intersection between the two. Thirdly, we've got PAL. PAL is all about the machine learning side of AI. If you've watched any of my previous videos about AI, I showed that the three subsectors within it, one about machine learning, the second one about privacy, and the third one about data storage. Next coin is all about Destra, data storage. Third one, OXO, which is privacy. The way that these three can work together in terms of trading is someone uses PAL to create a bot that creates a trading bot on Telegram to help you snipe meme coins. You need to use a lot of data to use all the pattern recognition, and it uses desync for file storage. And OXO has an anti-rug mechanism that might also use machine learning to understand what did previous projects do before it rugged a coin, and it uses a lot of data to store it, so it stores it on the cloud, and it stopped you from getting rugged because it sold all your coins for that meme coin you just put in 100% of your net worth to rugged. I've got GPU, also data storage, and then lastly, Palm, again, machine learning. In terms of memes, I've got a lower risk tolerance to memes because of obviously Pump Fund can launch up to 20,000 new tokens every single day. I think the market is moving much further back to the key winners as well as the ones that have the most mindshare. Obviously, that is why I've chosen much higher market cap coins with memes. I think those are actually the ones that are going to do the best this run. First one, I've got Whiff. Second one, Pepe. Third, Bonk. Fourth, Brett. Popcat. And then I've also got Punky and Mudeng. Mudeng, I still think is very new, very overextended. I haven't added any to my bags yet. I will wait for a much bigger pullback. As for gaming, I'm going to quickly turn all of these white. Got infrastructure plays as low risk, IMX, Beam, Super. I think if gaming takes off, all the infrastructure plays are going to do very well, much lower risk, much higher market caps. CDFI, I would also even put in low risk, but I have it put in as medium because it's got a lower market cap. When there's gaming in a bull run, CDFI is hotter than gold. Altura, also an infrastructure play, I put as high risk because it's a very low market cap, but Altura is very necessary for gaming infrastructure. If you know anything about NFTs, NFTs are non-fungible tokens and they're immutable, which means they cannot change. You have a sword that's level 1 and you play really well in the game, you level up to level 10, it's supposed to increase in stats as well as the way it looks. And if you have an NFT, it brings ownership back to the user base. And if that user cannot go and then sell that NFT for higher because it's now level 10, then what's the point of having the NFT? Altura allows that NFT to change over time. Next one is Moontropica. High risk again because it's a low market cap coin, but it's got a lot of memes in it. It's got a cult following, and it's also to do with gaming. Next one, Sidus. The reason I put it as a high risk is because it's one singular game, and that means to make sure that that does well, that singular game needs to do well. It's currently valued around 40 million in terms of market cap. But they're also starting their own launchpad, which is why I think it will do very, very well. And quickly going over price action of some of the meme coins. As you can see, a lot of these memes are pulling back to levels that I'm very interested at. Very similar to Bitcoin, we're forming lower high, lower high, high. This was the lower high that had to be broken. The break of structure went right past it. Now it's coming back down to a very strong level of support. Support always look to the left. This has been a strong support for a very long period of time. I would be happy adding WIF here, a small amount, as well as Pepe looking same as well. You look here, Pepe is holding that long-term support that was previously a resistance, flipped resistance into support, held support, held support, held support, again into resistance, and back down into support. This has been a very strong support zone for a long time. You want to be building this even from a fundamental point of view. You always want to be bidding high time frame support levels. This is one of them. Again, you can see that here with Brett. You could maybe look down to 0.0764. That would be a similar level of a stronger support. I wouldn't be bidding at 0.83 just yet. Similar to Mudang, it's a very new coin. I wouldn't be bidding this right now. It's still valued at 200 million. Looking at Ponky, holding that long high time frame support levels. I could wait till it comes down for 0.29. Very, very small differences right now. If you are interested, you can add a little bit, but as I said, we don't know what's going to happen in terms of the world events. I'm not a geopolitical expert. I don't claim to be, and I'm not going to pretend to be. But just looking from a TA point of view, a lot of these meme coins are coming back down to those high time frame support levels that you could be adding. Especially, as I said, if you're looking at this from a 6-month to 12-month time frame, the market is in a very good place. A lot of bullish indicators on a macro point of view that if you are okay with not timing the perfect bottom, just want to start layering in, this is a good time to start buying. That's just a quick market update. I'm still cautious on what's currently happening around the world. But I just showed you a lot of the meme coins that I'm looking at are coming back down to test those key high time frame support levels. Could it dip further? Yes, that's a possibility, but that's also a risk that I'm willing to take because I'm not trading, I'm buying in spot. I'm looking to hold for the next 3 to 6 months as I do think the overall macro indicators of the market are looking bullish. Interested to hear what you think in the comments, and I'll see you in the next video.